auto and other loans are likely to see a drop in interest rates after the Reserve Bank of India cut the key benchmark rate on Friday. The Monetary Policy Committee, headed by the new RBI Governor Sanjay Malhotra, slashed the repo rate by 25 basis points to 6.25%. This marks the first reduction since May 2020 and the first revision in 2.5 years.
Now, after a detailed assessment of the evolving macroeconomic and financial developments and the economic outlook, as I mentioned, we are forward-looking. The MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%.
The repo rate or repurchase rate is the interest rate at which the central bank lends money to commercial banks when there is a shortage of funds. When the repo rate is high, borrowing costs for banks increase, which is often passed on to consumers in the form of higher interest rates on loans. Conversely, a lower repo rate usually results in lower interest rates on home loans, car loans, and personal loans. For example, if a home loan borrower is paying 9% interest on a 20 lakh rupee loan with a tenure of 20 years, the monthly EMI would be 17,995 rupees. After the rate cut, if the interest rate is reduced to 8.75%, the monthly EMI would come down to 17,674 rupees, resulting in a savings of 321 rupees per month or 3,852 rupees annually. However, banks typically do not reduce EMIs immediately. Instead, they allocate a larger portion of the monthly installment towards principal repayment, thereby reducing the loan tenure. Borrowers have the option to contact their banks to reset the EMI amount if they wish to pay a lower installment after the rate cut. Experts believe that the rate cut will boost demand for homes, automobiles, and other consumer goods due to cheaper loans.
So now in the economic survey also, we have focused on domestic demand. This would increase the domestic demand. Plus the possibility is those people who are already on floating rate of interest, EMI, housing loans, they'll also have relief because rates of interest have been quite high since start of Russia-Ukraine war. So I think it's a nice decision.
Banks, however, may take some time to pass on the benefits of the reduced repo rate to customers. Based on past trends, this usually takes a month or two.